Good morning. It's July 2nd. This is George Kachuk with Know Your Options Inc. coming to you from the CME Group trading floor. Overseas markets were mostly up this evening. Some decent news out of China. The Chinese manufacturing index coming in at 50.2, slightly better than expected, and again above 50, signaling expansion. European markets also slightly up this overnight, rallying on Friday's close, which actually for Europe was the biggest rally they've had since all 2012, last Friday. And also Europeans are looking forward to Thursday, where it's widely perceived that European central banks will lower the interest rate by a quarter point down to 0.755%, which will be a new low. Now this morning, the U.S. equity market started out pretty flat, slightly positive. However, later in the day, what we saw was the ISM number coming out at 49.7. That was the first showing below 50. 50 signals expansion. So that was the first time since July of 2009 that this number came in below 50. However, on the positive side, construction spending, June construction spending came in at 0.9%. Consensus estimate was looking for 0.2%. So now the question for equity traders is, was Friday's rally where the NASDAQ rallied 3% on an increase in volume and the S&P rallied 2.5%, again an increase in volume, was it a short covering rally or is it a continuation of this new uptrend? The only way to really answer this is to look back what's happened. If you remember last week we talked about June 4th possibly being a bottom day, and since that time we've had about 20 trading sessions. We're looking to see for the S&P to hold the 1300 level. It did. We saw resistance 1340, 1360. The S&P, the cash S&P, was able to take out the 1360 level on Friday, so we're looking to see if it can stay above this level. Now the NASDAQ, we're looking to see if it could hold the 2850 to 2800 level. It did. Resistance was the 2880 to 2900 level. The NASDAQ surpassed this on volume on Friday, again showing pretty good signs. Now also, if we look at these past 20 trading sessions that happened in June, what's interesting to see, if you measure each day and count accumulation days versus distribution days. Now, an accumulation day we'll call a day when the index was up on increased volume, and a distribution day where the index was down on increased volume. And what we actually saw is that we had actually 10 out of those 20 days, 10 of those days were accumulation days. We only had 2 distribution days and basically 6 unremarkable days. So of course it's still early in the trading session. We'll have to see how the markets close up today. Now when this ISM number came out this morning, it hit the markets a little bit. The Dow was down about 50 points. The S&P was just down about 3 points, and actually the NASDAQ, as we speak, slightly positive. So again, we'll be looking at these levels. Can the NASDAQ stay above 2900 level? And can the S&P stay above 1360 level? Or we might still be mudding around between 1340 and 1360. Now, fundamentally speaking, fear still rules the day. Okay, we have the 10-year Treasury yield at about 1.6%. Basically, the bond market's telling us it doesn't expect any growth in the near future. So basically, we have our wall of worry to climb. So we again look back at the indices, see how the price and volume action is going on there. Now, if you're going to be long, we talked about the housing sector last week. It's still showing pretty strong. We had good pending home sales number come out later in the week. The Case-Shiller index, which measures home prices, showed 17 out of 20 large metro areas where the prices were increasing. Again, that's a positive. So also, if you look at the ITB, which is the ETF for U.S. home construction, that actually broke out on Friday. So a lot of positives in that sector. The medical sector, from biotech to pharma, benefit managers, all those stocks are also acting pretty well. Now, the one sector that's been a leading sector for quite a while has been the retail sector. However, that was showing weakness last week. So we may be seeing a shift in trend. Tread lightly in that sector. Okay, and going forward this week, what we're looking at is on Friday, the non-farm payrolls. Consensus looking for about 90,000 jobs created in the U.S. Probably nothing too great in that number, nor do I think anybody expects anything too great. So again, look back to the indices. Right now, we think that this new uptrend is for real, a little bit more than a short covering rally. We have our wall of worry to cover. Our wall of worry to climb. This is George Kachuk with Know Your Options Inc. coming to you from the CME Group trading floor, and have a happy 4th of July. Thank you.